All right, are you looking to retire? Are you a law enforcement officer and you think retirement's on the horizon, but you're super confused? Do I stay and work because I need health insurance benefits? Should I have a company and can I get a group plan? What's this Obamacare thing do? What does it mean? Is it going to help my family or hurt my family? If you have any of those questions, you might want to listen to this episode with Officer Ty and I, because that's exactly what we communicate about. Welcome to the Cedar Harvest Show, where we focus on financial education for a variety of things that affect not only your life, but also your spouse, children, charities, and your legacy. We discuss everything from health insurance to pensions, wills and trusts to best way for everyday tax planning. Our intention is to bring financial education, legal professionals, together with everyday people who need their help. We have real conversations with real people who have real life questions and scenarios. I'm your host, Mario Lizarraga, and today's show is part of our law enforcement series. I'm so happy to have our co-host, Officer Ty, welcome buddy, who is an 18-year law enforcement officer currently employed here in Arizona. Our show is to help law enforcement officers understand their government benefits to the fullest extent possible. And then what happens after retirement? The big question. Today, we're going to continue our conversation about health insurance. Welcome back, Officer Ty. Let's do this. You know, we've got some cool things to, exacerbate how exciting this is. Oh, yeah, the cash sound. But I think it's more like this is what we're going to hear out there.
Pretty much.
Everybody hates insurance. Let's be honest.
True.
You hate insurance.
I hate insurance.
But it is amazing. I hate insurance too, and I'm a health and life insurance agent, so I deal with it all the time. And I recognize that when I'm talking to anybody, regardless of what their profession is, we all hate insurance.
Yeah.
You know, there's not a single one of us who I have yet to have anybody come through my door saying, wow, this is fascinating.
Yeah.
Right? And what is fascinating, I know a lot of government employees take that job for not only stability of, a paycheck, but also the benefits.
Benefits, yeah.
Right? Safe to say?
Yeah.
So, I think we've kind of touched on this before, but, when it comes to retirement time, it seems to really keep people looming around, right?
Yeah, it does. And I think we were talking before we started that it got brought up again in one of our briefings. They were talking about retirement, and health insurance was what they were talking about. There's a couple guys who were close, getting ready to leave, and they have, questions about their health insurance and what they're going to do. Like, do they need to stay longer? Like I think we've mentioned it before. Like, a lot of guys will stay longer than they probably should because of the benefits, and it's
So unnecessary.
unnecessary. Yes.
Right. I mean, I would say they're saying that statement apathetically,
Yeah.
right? They just don't know.
Yeah.
Right.
I would say that's a big problem is they don't know.
And that's one of the things we're going to try to pull back the mystery. Yes, you guys have options to stay on your current system. And from what I've seen, I've gone through and I've reviewed some things. Hopefully in the near future, we will have somebody come down from ASPRS.
Yeah. PSPRS.
PSPRS, sorry.
Yeah.
And or somewhere from the health insurance world.
Yeah.
And be a guest and help really truly explain, what people don't understand. Because
Yeah.
I'm willing to bet that they've really done probably a really good job of trying to comprehensively put benefits in place so that you guys do have really good, strong benefits.
Yeah.
But I would argue also being in this space now, you're probably overinsured, right? You probably have too many benefits. It's probably too benefit rich for what
Okay.
most people need,
Yeah.
right? And this is where people go wrong with insurance because we buy out of fear, not out of knowledge.
Yeah.
Right. And I think for most people, they have overall fairly healthy family,
Yeah.
whereas, there's a guarantee these have probably really strong mental health benefits, which if you need them, I get it.
Yeah.
It's going to have some, robust networks, which again, if you need them, I get it. Right. If you're that person who says, I have to have Mayo Clinic.
Yeah.
Okay. You're going to cost yourself a bunch of money.
Yeah.
Not everybody feels that way, and if you're an everyday guy who's just like, I don't need Mayo Clinic. I mean, if I need it, heaven forbid, well, I'll find a solution at that point,
Yeah.
which is kind of scary because people, last thing you want to do is go look for benefits when you're in the middle of something big.
Yeah.
So, but reality is if you take on a little bit of risk and once you understand the policy, and it's not even when I say a little bit of risk, the risk is maybe that your network of providers might be smaller in the sense where maybe Mayo Network is out of network.
Okay.
It's not a matter. None of these plans, or very few of these plans that I look at here, are going to have stipulations on we're going to cover a transplant. We're not going to cover a transplant type
Yeah.
situation, right? We're going to cover this type of cancer, but not that type of cancer. It's not that kind of risk,
Okay.
right? It's a matter of facility risk. Can I go to this facility on all plans, or am I limited? I can only go to these certain facilities. That's called a network.
Okay.
And so as I look through your plans here, when I first look at them, what you have in retirement, first and foremost, you have what's called, they refer to as a subsidy in here, where they offset your premium cost, your premium load by a certain amount. That's a whole conversation in itself that I'm kind of reluctant to get into.
Yeah.
I don't want to miss. I can see the data, but I'd hate to say something incorrectly. That's why I really love to have somebody from the department
Yeah.
just explain it, because that's all they do is eat, sleep, breathe this stuff, and they can explain it very simply. From what I can see on the surface, just without getting too far into the weeds, it appears that when you retire, they're going to help you offset your costs about $260 a month is what I'm seeing roughly.
Okay.
Now we are looking at 2024 numbers, and so from that point, they give you the option if you want to stay within their retirement health insurance plan. It looks like they're giving you three choices, just
So,
like probably you have now. You probably have three choices. How many choices do you have today?
I mean, without looking at it, I mean, I don't.
Likely three.
Probably, yeah. It's
Yep,
probably.
I'm sure. And most companies out there, most major plans, group scenarios typically have three options. That's pretty common. So, the most robust plan is ungodly expensive,
Yeah.
right? When I look at this here, when I'm looking at numbers here, I mean, just for the employee on the most robust network, assuming you're not eligible for Medicare,
Okay.
okay, we're talking under 65,
Yeah.
right? So at that point, just for you, a single member, $1,408. And granted, these are 2024 numbers.
So you're saying it could be higher than
It's likely higher
Yeah.
for 2025 and then moving forward.
going forward. Yeah.
So, but it's going to be, no, I imagine it's going to be somewhere close, but that's for the most robust plan. And from what I understand here, you now get a $260 subsidy, you personally, to go against those numbers,
Okay.
right? So $1,100 and 1,140 basically is what your monthly premium would be for you when you retire. That's a lot.
That's still a lot.
That's a lot of money.
Yeah.
Right? I would never recommend that to somebody unless they really had some big stuff going on. Like, there's gotta be a
That
reason
plan or just
that particular price point in the plan.
Gotcha.
I'm a firm believer in pay the insurance companies as little as possible, without sacrificing your network, and that's one of the things I'd really like to look into here. It's assuming that the networks are exactly the same in all three of these tiers, I would recommend absolutely the cheapest plan that you have access to here, which is not the same network because it's an HMO.
Okay.
It looks like the choice value plan is an HMO again, 2024. So don't, that's what we're looking at.
Yeah.
That's $886.
Or
So
the subsidy.
before the subsidy.
Okay.
So back off your 620. So now you're down to 520, 530, whatever, if I'm doing math right.
Yeah.
That's not terrible.
Yeah.
Right? Or am I doing my math wrong? 620. I'm 50. I currently myself, I'm in the private market. I have United Healthcare, the Choice Plus network, which is your most expensive one. I personally pay right now $770 a month for a plan I never use.
Yeah.
Right? But the reality is if I were in a situation to need it, I've got a great
You got
I've
a
got a
good-
great network.
Yeah. Okay.
I've got Mayo Clinic in my back pocket. Right? And if I've learned anything about being in the insurance space, it doesn't matter until it matters.
Yeah.
So I'm of the opinion if you can afford it, then this is a luxury you should afford, right?
Okay.
Right? I don't, but understand it is a luxury just because people can drive an Escalade. Do you need an Escalade, or do you just like the Escalade?
Yeah.
You can get away with a standard truck
Yeah.
or a standard, Chevy Tahoe,
Yeah. Yeah.
which is still a great vehicle.
Yep.
But it doesn't have all the seat warmers and seat coolers and massagers, and
Yeah.
so it's kind of the same kind of situation. That's kind of a really rough analogy, but
Yeah.
but I mean, that's the reality, is it? And that's if you choose to stay within the department, stay with that with the states.
So whatever this, and this is stuff that's not. I don't have to take this.
You don't have to. This is just another option you have.
If I have it, okay.
So like one of the questions I would have if we did have somebody here in house. Okay, so what happens if you choose not to when you retire? Can you go back to it?
Yeah.
I'm
So
gonna
if you decline it right away, if you're able to go back.
Does that mean you're out?
Yeah.
Because one of the benefits that you have is you have access to this plan right now, right? and it's not like a typical COBRA. A typical COBRA lasts for 18 months,
Okay.
right? This is a plan that you have, from what I can tell here, in perpetuity. I don't think this is the COBRA plan that I'm seeing, but I could be. Again, this is where I'd love to see. I'd love to talk with somebody from the department who could,
Yeah.
there's a lot of information because obviously they have to disclose everything being public money.
Yeah.
So from what I can tell here, this is 2024 ASRS retirement healthcare premiums. Okay. So, and it does say up here that you being PSPRS that you do have that you're going to share into the ASRS healthcare. So it's like it's a shared system. It looks like
Yeah.
when it comes to the healthcare side. So that would be the kind of the similar to Cobra, but it's not going to expire. You're going to keep this. So
Yeah.
I really wonder, can you get it back
Yeah.
if you elect
So
to
if
go
you
out?
say, no, I don't want to use this.
Right. I don't know if they're going to allow it. I imagine they probably won't. I imagine you have a window of time to say, yes, I want it, or
Or
sorry.
it's gone.
But I could be totally wrong.
Yeah.
That's a great
That's a
question.
good question.
Anybody knows the answer to that, please put it in the comment
Yeah. Comment.
because we want to know. And if you know anybody within the state system who can help facilitate the proper information, that's what we're really looking to provide here. But we're just going to cut it up and see what we can find on our own, just as if we're a couple guys out there. I'm not a cop, but
Yeah. Like if I was searching this myself, this is what I would.
this is information you could find out
Yeah,
there.
so
So I can just,
everybody knows.
I understand the jargon
Yeah.
and I understand the networks, and so there's a lot of good benefits. So for instance, the more expensive plans includes out of network coverage. Okay. Meaning so getting back to, let's explain networks.
Okay.
All right. So when you go to a doctor and they say they take your insurance,
Mhm.
right? They all ask for your insurance card.
Yep.
And that's the first thing they're doing is to check and see that they take your insurance. And that means that they're in network. All right. And if you ever go to some place and say, we don't take your insurance, it means they're out of network.
So before you go forward,
Sure.
I've always wondered, like, what's a determining factor for places like to say that they're going to be that they're going to accept your insurance or this one's not going to accept it. Like, how do they determine that?
This is so the sole factor going into that is the almighty buck
Okay.
from the provider's standpoint.
Okay.
By the provider saying, we're going to take this insurance, which means they're going to go in network, right? Which means that insurance company is going to give access to that doctor to tap into their network of insured individuals.
Okay.
That provider has to agree to a fee for service schedule. Okay. So
Set by the insurance company.
set by the insurance company.
Okay.
And so when the provider says, okay, I'll take that, I'll participate in your network over here.
Yeah.
There's a set network, what's called network repricing schedule.
Okay.
So that Band-Aid, for that aspirin, for that broken bone, for that screw, for that heart surgery, right? That's why they have medical coders out there. The medical coders go through and they code appropriately. That code has affiliated. Every network has a different pricing schedule.
Okay.
All right. And so that's called network repricing. So the benefit that everybody with insurance has when they're in their deductible phase, by you giving that card and you staying in network, is you're going to pay that network reprice rate, which is essence the wholesale price. Okay. It's just like being a contractor and showing up at the lumber yard. Well, they get a bit cheaper rate being a contractor than we do typically as just a guy walking in the
Yeah.
streets.
Okay.
Same kind of concept. So network repricing, so that's why it's a big deal. And that's why the top docs only take the top insurance companies.
Okay.
Right. And this is why when you start looking into other plans, in this case, let's jump over to Obamacare, right? Which is by all accounts, a really good insurance, right? But it's not as good as these top insurance plans here. It's not as good as the group plan that I have access to, because I basically have access to the same plan as you do.
Okay.
That's what I bought into that network, which is the Choice Plus network, a PPO network. I can go anywhere. I get some cancer, I can go to Cleveland Clinic, right? I can go to Mayo. I can do so many things. So it's all about, so when you're buying insurance, it's all about buying into what network you want.
Okay.
And not everybody needs this robust network, nor do they care about it. So depending on who I talk to, I try to find out what's going on in your life first and foremost. What do you have to have? If you tell me you have this rheumatoid arthritis where you're getting a particular, injection therapy type of deal, that's a different situation. I'm going to recommend one of the stronger plans with the stronger network because you're likely going to need the specialty clinic.
Gotcha. Okay.
Opposed to if you're just an average Joe, you got your basic stuff going on, some high blood pressure, and maybe you're on the verge of, maybe you're pre-diabetic and, maybe you've got to have some basic stuff. none of us know we're going to have a heart attack,
Yeah, yeah.
right?
Mhm.
Versus, if you're on 10% of your heart working,
Okay.
right? It's a different situation. And at that point is when I say, well, let's take on more risk in the plan, meaning you don't need quite as many providers. You're not
Yeah.
going who cares about the out of network expenses because you're never going to use it, right? Out of network benefits, I should say.
Yeah.
So a lot of these plans, the cheaper plans that I see in here, not only are they HMO, which typically means you have to go to your primary care physician to get a referral.
Get it referred to go to somewhere. Yeah.
Typically, that's
Yep.
not always the case, but that's the most common trait.
Yeah.
Okay. There's some other factors that insurance companies ride on that make them an HMO versus a PPO. HMOs typically can restrict not only you going to your specialist right away, they can restrict the coverage area. Like maybe we're only going to offer insurances through Maricopa County. You can't go down to Pima County. You can't go to Mojave County. You can't do. Whereas the PPOs, they have their borders are more open. In addition to being able to go directly to the specialist.
Okay.
But most people always think of it. That's what they stop at. Like, oh, can I go directly to my dermatologist, or I need a referral? That's what people typically think about. So the most expensive plan, obviously, is a PPO, and it also includes out of network coverage,
Okay.
right? And most PPOs do, but again, really expensive. So that's kind of in a nutshell what I'm seeing here for what off if you choose to stay with the department plans.
Okay.
Okay, and it's good insurance. You have options, bunch of options. For you, what I know about you, I'd say, bro, take the cheapest plan.
Cheapest. Yeah.
Yeah, keep the cash in your pocket because in this, what I'm seeing here, for a family, you're basically looking at $1,500, which is still a lot. But if you just went just for yourself, that's 520, $620,
Yeah.
626. Then if you chose to add on your spouse, then you're going to basically add on another 1,100, which is pretty pricey. I would say put her on her own plan, right?
Okay.
Besides, there's not a lot of benefit for two people to be on the same plan
Okay.
because either way, you both have deductibles, you both have out of pocket maximums.
Yeah.
So where it starts to be beneficial for families to everybody have more people on the same plan is typically you have a 2-person deductible and coinsurance out of pocket maximum, right? So if you do have kids and blah 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 blah, very seldom does it happen where you have 2 family members hit their out of pocket maximum, but more or less even 3. I mean, that's crazy. You'd have to be like in the same car accident or something. You know what I mean? All in the same sort of quirky accident. Which
Yeah.
I mean, for those people who walk around waiting for that day, I mean, God bless them.
Hmm. Yeah.
You know what I mean? I just don't walk around with that kind of fear.
Yeah.
So if you buy these plans out of fear, the insurance company statistically wins time and time again. Right? That's just the reality. I am absolutely convinced now that I've been in this space that they have wired these plans in such a way to confuse us.
Yeah.
So we buy out of fear. I really, in my heart of hearts, that's how I feel about it. I think typically most people I run into, they all say the same thing. I want a low deductible and I want copays. And that's what everybody cares about until I talk to them and talk them off that ledge. And what you see is by the time we take you from spending $1,200 a month to $600 a month, well, we just saved you $600 a month.
Yeah.
Times that by 12. That's $7,200 cash in your pocket in premium alone,
Yeah.
right? And the out of pocket maximum on guaranteed on these things is not going to be that much difference. It's going to be well below that disparity is going to be less than $7,200. Maybe it's $5,000. So it makes no cash flow sense. Just because you want to go to go see your specialist for $50.
Yeah.
Well, why not keep the $7,200 in your pocket? Pay the specialist the $150, $200 they're going to charge you.
If you're gonna go there.
If you're going to go,
Yeah. Yeah.
pay it when you use the benefit.
Yeah.
Don't prepay for a benefit you're not going to use enough.
Yeah.
And even still, if you just say if you spent $7,000 more in premium and you only went to the specialist 4 times, well, you just cost yourself that specialist visit was $1,550,
Yeah.
right? People don't pencil it. They don't take a business like approach and annualize it. So I typically recommend to people to annualize their expense. And again, if you're crushing it and you've retired and you got your retirement and you got your side hustles going and you're making tons of money, in that case, I'm going to say, hey, give yourself the best stuff,
Yeah.
right? In that reality, I'd probably say, hey, let's get you out of here though. Let's just start a group plan on your own, right? So let's jump into that because that's
Yeah.
an
Option say then.
okay. So let's jump over into other options outside of the department.
Okay.
All right. Now those options, um, you have 2 options you're going to look at. And for most people, you're probably going to rule one of the 2 out. And really, there's more than 2, but I'm just going to talk about 2.
Okay.
And one is the individual plans, basically Obamacare. Okay. I just found out today that short term is also coming back. So Trump brings in short term. Obama took it away. I say Obama took it away first.
So quickly, you'll have to explain because I don't.
So basically, what's going on here is when Obamacare first originated, there weren't a lot of guidelines for these insurance companies. So you couldn't just go apply for any insurance company. They had a health questionnaire that you had to fill out, and depending on your health, they could say, Tyler, we're not going to we're disqualifying you. We're not going to take you,
Okay.
or we're going to take you, but we're going to exclude that pre-existing condition. Totally unfair. And then even if they took you on, and then all of a sudden you had a condition like your auto policy, as soon as you use it, what would they do? They raise your rate.
Raise the rates. Yep.
And so with the health insurance, people were getting trapped because they would raise the rates. They all of a sudden became a type 1 diabetic. And all of a sudden they're raising their rates. And when they go to apply with another company, a company won't take them because they're type 1 diabetic.
Hmm.
So people were stuck.
Yeah.
And so the insurance companies would just continue to jack up their rates. So what Obama did when he came in to create this thing called Obamacare now, that he refers to, it was a really important thing. It was a great thing. Regardless of how you politically sit when it comes to the healthcare system, it just basically leveled the playing field for healthy and unhealthy and said, just based on your age and where you live and your gender, this is your price.
Okay.
Doesn't matter if you're super fit, eating, veggies all the time, or if you're eating Twinkies all day long and you're just smokers.
Yeah.
Right. And so it leveled the playing field. So now you can go in, anybody, even if you come off force and you have all sorts of, mental health stuff you're dealing with, you're in the middle of cancer treatments and blah, 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 blah. You can still go to Obamacare and at your age, and it's a guaranteed issue plan.
Okay.
Okay. The downside about those plans, getting back to the network repricing.
Yeah.
The networks are smaller.
Okay.
If you're in Maricopa County, you're still fine. You still have lots of doctors, lots of hospitals, lots of clinics, a lot of options, but but no longer have all options. Current plan you're on right now, you pretty much can go anywhere.
Yeah.
Right. Everywhere is going to take your plan. So the individual market is filled with, that's the Obamacare. And then they also have what's non-Obamacare compliant. Okay. Which are what they refer to as short-term plans.
Okay.
So those people who are very healthy, who aren't on a lot of medications, who can check with the boxes on all the health boxes. Yes, 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 yes. I have no blood disease. I have no heart disease.
Yeah.
Right? Those guys have the option. Well, they will again here pretty soon. They'll have the option to buy that plan. And so what happens is now you're lumped in with a big healthy block of business. So United Healthcare drops the price.
Yeah.
Right? Because it's only there. You're in a pool of people that are all checked no on all the boxes.
Yeah.
Unlike Obamacare, there was no checking of any boxes.
Yeah.
Right? You could be in the middle of cancer treatments and they have to take you tomorrow. So even though you're paying $600 a month for your plan, you're doing $20,000 in treatments the very next day.
Gotcha. Okay.
Right? I mean, that's what they're up against. That's the challenge with that. So what's happened, the political jockeying, that one of the political pieces that they pull levers on all the time is the health insurance, as we all know.
Yeah.
Right? So Obama put in kiboshed originally the original plans where where the insurance companies were running loose to 9 people, da 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 da. Trump comes in and says, no, I'm going to allow people to have an option, a choice.
Yeah.
I'm not going to force people into Obamacare if they want insurance. I'll let those people who need Obamacare go into Obamacare. People who are healthy and they want to go and have options, they can go find these other plans.
Okay.
Those now have to be referred to as short-term plans.
Okay.
Okay. They're dangerous for people who have ailments going on. I would never recommend that to somebody who has problems in their life. All right. And so Trump puts it in, then Biden comes back, nixes them, so they're gone of it. Right.
Yeah.
Now guess who's back in office? Trump. And now guess what's coming back online?
Yeah.
One company's already doing it, all states already doing it, and then United Healthcare is coming back on in like another, I think week or two. Reality is it was before at least a 40% savings in premium. So it's substantial.
Yeah.
It's big money, right? You take 40% of a family of 4 that, as you're looking here on a family of 4 here, you're looking at, even if I did the middle package, $1,800
a month. Yeah.
Family of 4 on like one of these short-term plans of a healthy family, it's probably gonna be somewhere around 1,000. Which one are you going to take?
Yeah.
Right? Got a kid in college. Well, do you care?
Yeah.
You just want to know that he's getting fixed.
Yeah, exactly.
Right? And still a great network, still the Choice Plus network. It might not include Mayo, but it's a great network. It's a great plan, but you have to qualify.
Mm-hmm.
Okay. So that's on the individual market, and there are options. And this is why, I want to let everybody out there, don't go online and go buy insurance. Find a broker. All right.
Talk to somebody.
I'm insured. Call me. Oh, there's my shameless plug. Call me, but find a broker who's been around for years. Doesn't cost you anything. The commission's baked into all these products, right? So you're not going to save any money by going online. And that's what we usually do. We're trying to save money, right?
Yeah.
We just go online to find it 'cause we think we're cutting out the middleman.
Yeah.
In this case, all you're doing is you're cutting out the knowledge factor, and you're cutting out this man or woman's cell phone when you have a problem to call to answer to help decipher the code of insurance,
Yeah.
right? So beyond that, then your other option for those who do leave employment within the department and start their own business, well, those guys can trigger group plans.
Okay.
Right. So group plans is a big, massive world. There's a ton of options, but it comes with stipulations. Just because you have a uniform shop and you're putting police on T-shirts in different colors,
Yeah.
and you're self-employed by definition, doesn't mean that you can go get a group plan.
Okay.
Okay, you have to have at least one W-2 employee,
Okay.
right? In many companies, you have to have two, and that's at a minimum.
Okay.
And then from there, there's participation requirements. There's a lot of different other requirements, and you as the employer have to cover a certain percentage of your employee, 50% at a minimum,
Okay.
to trigger this plan. So it can be pretty cost prohibitive, right? But the reality is now you're in complete control. You don't have 3 options. You're going to have 2,000 options.
Okay.
All right. Maybe 2,000 is an exaggeration, but it's not far,
Yeah.
right? It's going to still be hundreds of options. That's the reality. And so again, but you can only access those through brokers.
Okay.
Right. And then go through and cipher it. But now you have a lot of options. So that we can find that doctor. You can really work a lot of different angles. And then the group arena is a whole big conversation between fully funded plans, level funded plans, and self-funded plans. And I'm not going to get into all of that, but basically what you're used to is a fully funded plan.
Okay.
And they're the most expensive. They have to take on pre-existing conditions. They're much more in line with Obamacare.
Okay.
They have to take all the pre-existings. They can't take anything away. No stipulations, yada, yada, yada. When you start getting into level funded, now all of a sudden they're doing a little health screening. So anytime they're doing health screening and can assess the health of the group, they
Okay.
can lower your rates.
Okay.
But that only works if you're a super healthy group.
Yeah.
And then self-funded, typically those are more for large companies.
Okay.
That can self-fund. So they basically will put in this umbrella plan, and they'll take on the company themselves will take on the liability for the first $20,000 in bills for their employee. And then anything beyond that $20,000, they have a stop loss of $20,000 in place, and this other insurance plan kicks in.
Gotcha. Okay.
Right. And those are kind of in a generic sense, that's a self-funded option for those people who are willing to take the most risk, but they want a safety net in place.
Okay.
Makes sense?
Yeah.
So there are a lot of different bells and whistles out there within this arena. The moral of the story, before anybody out there makes a decision of retirement, and nobody should let their health insurance should be the reason they stay employed.
Yeah, exactly.
That should
Happens a lot. Yeah.
That should never, ever, ever, ever be the reason you stay with them is because of health insurance. There are a lot of options now.
Yeah.
They need to consult with a good, knowledgeable broker. 100%. Check with them first. And they might end up coming back and say, this is the best option.
Yeah.
All right. And then if this price point is too high, well, then you make the decision then. But just to make that blanket decision without having a conversation with the broker,
Yeah.
that doesn't make a lot of sense. That's like going to court without a lawyer,
Yeah.
right? Why would you do it?
Yeah. You're not.
You know what I mean?
So they say in law school, don't do that.
I mean, why would you do that? I mean, it's just you can do it.
Yeah.
You don't have to have a lawyer, but why wouldn't you want somebody who understands the ins and outs of the system?
Mhm.
And so that's the moral of this conversation here is just find a broker to help you make that decision. Do not stay employed for health insurance.
Yeah.
Not in today's world.
Yeah.
That's an old school of thought. So what kind of questions might you have does anything come to mind through this? I can clarify it.
I mean, I kind of have questions about that last part you're talking about, but that's probably going to be it could probably be its own whole separate.
Okay, we can deep dive on it, but just at a surface level, what are some maybe the questions you might have?
I guess. I mean, you kind of covered some of the stuff. It's just, like I said, the conversation that I was kind of overhearing the other day was 2 guys are very close to retirement.
Okay.
And they were discussing staying longer. And I heard them talking about the reasons why one of them was staying was because of health insurance and why he needed to keep on the city's plan for his health insurance. The other guy had a wife who works, has a good job, has good insurance, so he was kind of in the, like, "I don't care, I can leave," whatever. I don't remember what it was. I think it was, like, he had, like, 2 years left or something. He's like, "Yeah, I can leave, I can just go on my wife's plan, and then we'll be good." But the other guy was like, "Oh, no, no, I gotta stay, because I gotta keep the insurance for." I don't remember if he had a kid. I feel like he did, but I don't remember. I wasn't part of the conversation, so I was just kind of overhearing it from, you know
Got you.
yeah. But I mean, I guess I'm not close enough now where I need to be, like, thinking about it, but, like, my questions would be, like, if I was, like, retiring tomorrow,
Mm.
like, what would you tell me? Like, just knowing.
Knowing what I know about you,
Yeah,
I would say take the cheapest plan.
cheapest.
If you were to stay with this, I would say take the cheapest plan because they are subsidizing $260,
Yeah,
right? So that fact is that so if the cheapest plan is this,
yeah,
by the time you do this, the 260,
yeah,
I would say take this because the subsidy is real. They're subsidizing you.
yeah,
But if we could go out there and find, and again, I would look a little deeper into the network to see what you're sacrificing by taking the cheapest plan.
yeah,
And if the cheapest plan was comparable to a plan I'd find on the individual market, I'd still tell you to take this with your in-state stuff. But if I saw that it was a, $200 to $400 a month difference for you, I'm gonna say take the cheapest plan
yeah.
in your sense. I personally like HSAs. I do not see any HSA benefits in here. I don't have it.
That's what I have an HSA now, and I like it a lot.
Yeah, and I really like, the HSAs, and I don't see for your retirement options, which makes sense. Why would they? Because um, a lot of times that can be tied to payroll and benefits that, I'm sure your HSA, they probably kick
They
in a
give
little
you
money.
yeah, every year they give you some money. Yep.
Right, so that's where you typically find them. So in this, there is an HSA. It's your age. I would say let's take a look if you're healthy. Let's go take a look at an HSA because reality is that gives you another tax deduction to lower your taxable income. Because one thing I've learned about working with law enforcement is you do have this pesky little thing called a pension,
Yeah,
right? And then after this pension starts paying, very few of you just sit there and not get another job.
yeah.
Right? You typically go
It's
out
true.
and double dip, whether you're going with another department or whether you're doing off duty, whether you're starting up a business,
Yeah,
right? And so you're just all you're doing is amplifying your income, which is amplifying your tax liability. So anything that's going to help you offset that tax liability, I'm a proponent of.
so that leads me to a question because I've wondered this. I've wondered this before about the HSAs because I always see that on, posts and things on social media or whatever, talking about how you can use HSAs as kind of a tax savings, but I guess I don't understand how that works. Like like they talk about it, but I don't understand like
The,
what you would use to do that or how would you would use it to do that.
well, reality is you have the ability to fund your HSA
Yeah.
up to a certain level. Right now in 2025, I want to say it's 4,100. Let's see what the current HSA contribution limits. Contribution. It's 2020. Yeah, this year is $4,300.
Okay.
All right. So
So
that
that
means
lowers your taxable.
taxable income by $4,300.
So, but then that money you're putting it into the HSA account, but it's got to stay there and be used for.
Healthcare,
Yeah.
right? So as we looked in one of our prior conversations, if the doctor says you have high blood pressure,
Yeah.
you need you need a sauna at your house to help lower that blood pressure,
Yeah.
right?
Yeah.
Here's your prescription,
Yep.
right? Now all of a sudden you can use those HSA dollars to buy that sauna, right? And now what you've done effectively, if you used pre-tax dollars to buy your sauna. If you don't have an HSA and you didn't have put money in your HSA, you had your gross income, you were taxed, it left your net income, which goes into your checking account.
Yeah.
And then you bought your sauna after that. So you used after tax dollars to buy your sauna.
Yeah.
So your sauna was that much more expensive because you've already paid income tax and then used after tax dollars to buy your sauna. So the HSA is a great retirement vehicle because guess what? We're all going to get older and we're all going to have needs.
And that's what I'm saying. So I guess that's where my question would be then. So it's good like for things like that because it seems like there's a lot of things now that are getting lumped into like
Do you think you're ever going to need dental care?
I would assume yes.
Right.
Yeah.
So HSAs can be used for dental, vision, anything medical
Yeah.
related, copays, prescription drugs, band-aids, almost a lot of things at Walgreens. There's a big long list of all these things that you can use those dollars for that you guaranteed use throughout your life. And as you get older, vitamins are on there,
Yeah.
right? All these things that guaranteed you're spending money on, and right now you're probably using your HSA account, or you should be, right? Because those you can use that. So basically, an HSA account's going to come with a debit card and a
Yeah,
checkbook.
that's what I have. I don't have a checkbook, but I have a debit card.
Debit card, and as long as you use out of that, right?
Yeah.
It's not affecting you. It's different for you because you're using the it's part of an incentive for you. So they're giving you $50 a pay period, $100, whatever they give you,
Yeah, they give you money at the beginning of the year.
beginning of the year.
Yeah.
So that's great for you. And the good news about HSAs is it accrues.
Yeah.
That money
It
stacks.
rolls over.
It rolls over from year to
It
year.
doesn't. I don't. It doesn't collect interest, right?
No,
No. Okay.
not that I've heard of. I've never heard of an HSA said use account collecting interest. And but that doesn't mean they don't. I've never seen one.
Okay.
And a lot of other companies that will use what's called an FSA.
Okay.
And if the state gave you an FSA, that means you have that 1 year to use the dollars.
Oh.
Otherwise, they bring them back. They give you $1,200 and you only used 800. They're pulling the 400 back.
Gotcha.
That's the beauty of an HSA. So again, that's why knowing what I know about you on the private sector, I would probably say if the HSA is going to be $200 cheaper a month, I'm going to say, hey Tyler, buy the HSA. Use that $200 in premium that you would normally pay to United Healthcare.
Yeah.
Pay it to yourself into your HSA.
Gotcha.
And start accruing that money, and that way down the road when you are 70 and you need dentures,
Yeah.
right?
The money's there.
You got money.
Not having to pull.
Yeah. And you did it, and you also did that lowering your taxable income. Okay. So that $2,000 you put in there, because it is your money.
Yeah.
Right. You're not getting a tax deduction for what the state is putting in there. Right. You're only getting a tax deduction for what you fund.
Yeah.
And I'm pretty sure, and this is where I should know the answer to this, but honestly, I just don't. If they are giving you $2,400 up front, you still can, if I'm not mistaken, you can still only fund this thing $4,300 total. So if they gave you $2,400 up front,
up to
right?
So I can't put 4,300 in.
Not if they're floating you at the 2,400. So 2,400 minus that.
So that might be another thing,
right?
Question to figure out.
Yep, and one thing about these two, when you're over 55, that goes up $1,000.
Okay.
Right. So again, you have there's some added value that you get from talking to a broker.
Yeah.
They're going to help you understand let's have that tax conversation.
Well, so that's part of what I guess my question was going to, is that I don't think it's just law enforcement. I would say it's probably there's a lot of like the rumors that get put out there. Like you talk to one guy who's maybe doesn't. It's hard to say not knowledgeable, but maybe they put out some info to somebody and then it starts getting spread around. This is how you do stuff. Instead of talking to somebody, like you said, like talking to a broker who does it for a living and actually knows instead of relying on somebody that maybe just maybe just pulled it up on Google and didn't do a full dive and didn't answer questions that need to be asked about it, instead of going and talking to a broker and being like, hey, is this true? Or like, what can I do? Just relying on people at work.
Yeah. And that is a challenge. I mean, we're faced with this challenge. We're seeing it more and more depending on where you're getting your information from.
Yeah.
That taints us all one way or the other.
Yeah.
So even when you're looking for a broker, I'm not saying go to any broker. There's some questions that that should probably be, well, we should probably have an episode on that. Like, what constitutes a good broker?
Yeah.
Right. I mean, coincidentally, I do have a lot of business experience, but I also, in the health insurance arena specifically, I am our in-house group specialist. So I do understand the level, fully level and self-funded plans.
Yeah.
Whereas most brokers out there, they don't. They only do under 60. They only do individual, and not group.
Yeah.
Right. And so the group, it brings in a whole different element. Just like I don't do Medicare.
Yeah.
Right. So finding that brokerage firm that also understands Medicare, because that's a big difference. Your benefits change upon Medicare when you get into 65. And so I don't, and that's because now the government is picking up a lot of your bills already.
Gotcha.
Right. So they're not giving you the same benefit because you're not needing to buy the $1,800 a month plan.
Yeah.
Right. So I haven't. So again, that's another reason that we really, anybody watching this, please, please, please get us in contact with somebody from the Arizona State Retirement who understands these, the medical plans. We'd love to talk to you so you can just tell us the nitty gritty.
Yeah.
Right. All right. Well, I mean, another exciting episode on
That's about right.
health insurance. We could care less. Or yeah, so expensive. This is really the funnest part. I mean, we got to figure out which one we're gonna have. I don't know. I think actually, what is it? Yeah, that's that's kind of how.
Failure. Is that what it says?
Yeah, well,
Failure.
cartoon failure.
Yeah.
Uh-oh. Joey, you messing with us over there on the sounds? So that's the end of this episode.
Yeah.
I think that's a good sign off.
I think it's a good sign off. Yep.
All right, buddy. We'll talk soon.
Yep.